When I say mutual fund, what comes to your mind? It's a basket of stocks, right? But this basket of stocks can be of different varieties. I mean, there are mutual funds that invest in specific sector, a specific market cap, or different asset other than equities such as bonds, gold, silver, etc. And then there are some who mix all the above and put them in one basket under the name hybrid fund. Basically, when the concept of investing hit the mainstream, people wanted something more, and the investment community had no other choice but to become creative. So now we have 44 AMCs with each offering 20 to 30 different mutual fund schemes. Take for example ET Money Genius. They offer 6 different multi-asset portfolio strategies, meaning they invest your money in 6 different ways, segregated based on time horizon, risk ratio based on the asset allocation, etc. More on ET Money at the end of this video. Hello everyone, I'm Rakshith and in this video I'll talk about mutual fund investing and its 3 broad classifications. Number 1. Equity fund. Equity mutual funds invest in equities and equity related products. The allocation of stocks is based on the market cap. For example, most mutual funds, especially equity funds, like to own large well-known companies with predictable revenue stream. We have 3 types of equity funds. Number 1. Focused fund. A fund with only 30 stocks is called focused fund. This mutual fund will be mostly comprised of large and mid-cap 30 company stocks. Number 2. Flexi-Cap. Here, as the name suggests, the mutual fund is flexible enough to diversify among large, mid and even small cap stocks. So they invest across the market cap. Number 3. Multi-Cap. Similar to Flexi-Cap mutual fund, the multi-cap also invests across the market cap, but the key difference here is that the fund cannot invest less than 25% in each market cap segment. Number 2. Debt fund. The debt mutual fund invests in fixed income instruments. To learn more about FIIs, check this video. Basically, debt funds are selected for 2 main reasons. Number 1, high interest rates, and number 2, minimal default risk. Obviously, both these aspects cannot go hand in hand. In other words, if the interest rates on debt instruments is high, the instrument or bond as we call them are likely to be classified as high risk investments and vice versa. Since it is difficult to invest on our own, we choose debt mutual funds wherein the fund manager invests in AA or even AAA rated bonds, government securities, corporate bonds, or basically a mix of all. Number 3. Hybrid funds. As the word suggests, hybrid means a mix of different assets put together. Here we invest in equities, debt instruments and other assets and try to seek a balance between them. We have 6 different types of hybrid funds, and the basic understanding is that the portion of equity, debt and other assets changes from one type of hybrid fund to another. For example, an aggressive hybrid fund invests 65% to 80% in equity and related products, while the rest 20 to 35% will be invested in debt instruments. On the other hand, a balanced hybrid fund invests 40 to 60% of its total portfolio into equity and debt, effectively balancing between these assets. Conclusion. As said earlier, we have a lot of different mutual funds, so there are other classifications too. Here I have explained just 3 prominent mutual fund classifications. If you are interested in knowing more about mutual funds, check the link in the description. I have written many articles on mutual fund investing, its importance and basically how to invest in mutual funds. Do check the description. Now let's see what ET Money Genius is all about. Making money in the stock market isn't easy, right? That's when I realized that in order to earn better returns, instead of running behind top mutual funds, why not try ET Money Genius? ET Money Genius will understand your risk profile and suggest various mutual funds where you can invest. For instance, you can invest in a mix of index funds of large, mid-sized and even small cap companies. Why not try international equity, and even debt instruments and gold funds are offered. Basically, you get a very well diversified portfolio. Not only that, ET Money Genius will also make timely adjustments to your portfolio such that your portfolio returns are not affected by changes in the market. So what are the expected returns? Well, if you had invested as per ET Money Genius high growth mutual fund strategy for any 7 years in the last 15 years, you would have earned 16.1 CAGR returns. The wait ends here, because with no additional work, you can earn a wonderful return just by subscribing to ET Money Genius membership. Check the link in the description. Thank you for watching.